Okay, here we go. Hello, everybody. Welcome to TraderMerlin Show for your Thursday edition. And About Face Thursdays, you had a lot of hammer formations on a lot of these indexes, which we'll talk about a little bit later on the program. For those of you who are new, hit that subscribe button so you're alerted when we do this show every single day, Monday through Friday at 2 p.m. Pacific time. If you have comments, questions, feedback, put them down below the YouTube video or email me at TraderMerlin@gmail.com. All right, so for today, we've talked in the past about natural gas. We talked about a lot of the commodities side of things. We talked about oil, and we've had our guest on. Our guest is going to be on here. He was on. When were you on? I think it was actually a month ago, exactly a month ago, on this program, talking about natural gas, and actually talking about the potential for some seriously increased prices. And lo and behold, we've had this mooning of natural gas. Of course, here to help me make sense of it all is John Rowland. John, how you doing, my friend?
What's up, Merlin?
Whoop, whoop. Good to see you. How you been?
Raining it in, brother.
Making it rain?
Yeah, it's been crazy. I don't know about you, buddy, but in my professional career, I mean, yes, the markets are volatile, and maybe as an investor, it's not a great time for investing stocks, but I'm telling you, I have never seen so many trading opportunities in a very short period of time. I don't know how you feel, but that's the way I feel lately.
I think there's a tremendous amount of trading opportunities. Just got to be careful. Like I had, I find them all the time. Usually I'm just kind of chipping away, though. I haven't had any real great runners because most of my, the bigger trades I'm making are biases to the short side. So clearly, you get these nice spikes up like we've had, and it just erases a lot of those gains. But yes, there's tons of opportunities out there. I don't know if it's any more than it ever has been. I just think that there's always something. Maybe you're just more alert and aware of what's going on right now.
It's definitely, I think there's, as a trader, you build confidence when you have some winning trades and you feel like you're getting in tune with the market.
Yeah.
So I feel like I'm doing that. I've definitely been playing a lot of puts on the short side in the equities markets, and I've made some nice swing moves, but also I've been very heavy looking at the inflationary play, especially through the commodity world, which is my background.
Mm-hmm.
And I don't know if I'm lucky or whatever, just in the right spot, but some of the trades that I've been in have done really, really well in the last 3 months or so.
Nice. Well, congrats. It's always good to get on those. We always love those nice big winning runs, because of course we know that there'll be losers ahead. But what's the old phrase? Smoke them if you got them, right?
Something like that. Or make hay when the sun shines, right? Too.
Make hay when there's sunshine? I don't know if I've heard that one. That must be a Midwest thing.
It is.
We don't have hay out here in California. We got cactuses and salt water. Let's talk about natural gas. Obviously, actually, I think I have some charts here, and maybe I even have some lines on it now. I think I took the lines off. We've talked a lot about this natural gas chart, especially going back into last year when John was saying, look, I think we're going much higher because probably going to have a cold winter. And we did. We spiked up to around 650 on natural gas futures. That was back, I think, October is when John was talking about it. We spiked up to almost 650. And here we are again, creating a gigantic double top as of this exact second. Right now, natural gas at $6 or 6.383, up almost 6% on the day. Tell me what the heck is going on.
Well, I mean, we talked about this last time when I was on the show about a month ago, is that there's this fundamental dynamic shift now to the LNG market, and that how we've been exporting a lot of LNG to Europe. And this was actually starting to happen even before the Ukraine and Russian conflict. Can we call it a war now? I don't know, but whatever.
We're not. I guess the U.S. is involved, so it's still a conflict, I guess.
Okay. But in recent weeks, when the Biden administration or when Joe was over there and he committed to helping European nations get off of Russian gas, this commitment to, I think, deliver something like 500 BCFs, billion cubic feet, between now and the end of the year to help European markets inventories get back to normal. They've been way undervalued over, the inventories have been super low over the last, 6 months or so. So that dynamic shift, right, has really kind of like ripped the top off the market. And if we think about how, I'll give you kind of some perspective here. That let me look at my notes here for a second. In 2021, we were exporting about 9.7 billion cubic feet of LNG. Now, we distribute that all around the world, not just Europe. Mostly a lot of that was going to Asia.
That was 2020?
2021, that was a record year per day. And that was up 50% from 2020.
Wow.
In December of 2021, we reached a level of 6.7 per day just to Europe. And then in just the last month, it got up to about, what I heard was just short of 12 BCFs.
And that total is just because I'm putting numbers on the screen here just so we can kind of reference those. So you mentioned 9.7. That was total exports for the U.S., correct, in 2021?
Yes.
And then now you're looking at 12 billion. Or just to Europe or total?
We're talking about 12 billion just going to Europe now.
Oh, okay. Wow.
I
Holy
know.
cow.
It's amazing.
Well, and especially with what's going on with Russia. I mean, obviously, Russia is playing a little bit of a hardball out there with the European Union saying, hey, pay us in rubles or else. To me, that number could go significantly higher.
Yeah, for sure. If we broke down the commitment of that 500 BCFs that just to get them back to normal, which they wanted to get, that we've pledged to them towards the end of this year, that translates to about 15 billion cubic feet a day.
Wow.
Yeah. So there are some constraints now in terms of how much LNG we can produce. There's some secondary companies, marginal companies that are starting projects that are coming online that will increase our production. But like a company like Cheniere, who has what they're called trains, the factories. They have 6 of them running full blast. They're already telling their customers that they're sold out of all their production until 2025.
Wow.
So, yeah, it's amazing.
So this basically just goes back to the core principles of supply and demand. I mean, obviously you have a huge supply factor being not necessarily eliminated, but talking about Russia, thwarted or held back or potentially eliminated from supply. And then now it's like, okay, well, where the hell do we get our natural gas from? It's like, hey, America, you're the number one producer. Let's get some from you. At a certain point, we're going to be maxed out. And I guess it begs the question, where does this take the price? Because obviously, you look at this price chart, which is incredible. This is Cheniere, so let me go to natural gas price chart. And just since December of last year, we were down at around 350. Now we're at 650, so almost 100% gain. I'll look at the longer-term chart here just for fun. Here's a monthly, everybody. Where the heck does this take us, John? Are we going to be looking at 13, 14 bucks again?
Well, I'm going to put my neck out on a limb. I think we're going to see the July natural gas contract test $8 by Memorial Day. And the whisper that I'm hearing out from my colleagues is that we will see double-digit numbers by the winter of this year.
Wow. Holy cow.
It just, like you said, it just comes down to supply and demand. We're just substituting gas that was a domestic market here in the U.S., and now we've opened up our domestic market to the global market, and the price of natural gas in places like Europe is like 4 or 5 times greater than it is here in the U.S. If you have a chart, you could probably pull it up. There's a reference value. It's called, the chart is the TFF. That's the reference natural gas price for the European market. I think that is, or is it TTF? I forget. TFF?
I don't know. I'm trying to bring it up. No, it's not Trong-Than Furniture Corporation.
No, try TFF.
TFF, that's Euronext TFF Group. I have you gave me one that I think might be. No, I just got the commodities core CB index. I don't have that one.
Anyways, it might be different. It depends on your platform. It's a reference gas. That price is like gone to like 20 to 40, dollars a BCF. Where our BCF here in the U.S. is what, $3, $4, $5. So it's just a matter of price and supply and demand. if we're going to send 15 billion cubic feet to Europe, and that gas is worth $20 or $50 or $40, right? It has to come from somewheres, and what's it going to do to our natural gas price here in the U.S., right? Something has to come, right? Either theirs has to come down, their price has to come down, or our price has to go what?
Yep, kind of come up.
So,
let me elaborate on that. So I guess the question Nick Smith says, so what's the best long-term play on that? Options? I mean, look, there's a ton of ways to play this one. I've been dabbling a little bit every now and again with BOIL, BOIL, which is a double long, which is absolutely wild, especially when you have, moves like today of almost 12%. That would be definitely a much more risky play out there. But how would you play this one, John?
Well, I think, obviously the best way to play any kind of commodity market is through the futures market. But again, that's the volatility there. And most folks can't stomach these kind of huge swings. So, I want to think about the whole ecosystem of natural gas market from wellhead to delivery. So one of the stocks that I've been promoting for a while is EQT, which is the largest Marshall producer. So they're the ones who are pulling the gas out of the ground and putting it in pipelines and sending it to Cheniere. So that one has definitely done well. It's about doubled in about the same time period. Again, maybe this stock is getting a little frothy. My target was $40. We got pretty close to it. Looks like we're just kind of gathering a little of energy. Maybe we're ready. A little bit of a pullback here. But again, in the long run, I think this stock company is going to benefit as domestic prices rise. So then you talk about Cheniere. I think Cheniere, again, if we listen to what they're saying, that all their production has basically already been sold into the future. So I think this stock is probably already appreciated. It does look like, on a chart, I don't know if you have it up.
Yep.
But it looks like maybe a bull flag. I don't know. Maybe it's gathering energy and looking to try to test that, that all-time high around $1.50. Again, this could be a company that could be a $200 or $300 stock 3 or 4 years from now. Again, I don't know, depending on what the price of natural gas in Europe and other places, 2 or 3 years down the line. I think there would be some kind of normalization.
Sure. I don't know if it's really normalization. I think what you have now is the shock factor of Russia. And ultimately, at some point, we will get past this and these prices will come down. But, I've had a couple people ask me recently, like, hey, should we short natural gas? What about shorting UNG? What about shorting NG futures? I'm like, you can do that, but you're going against the avalanche at this point, and you're saying you're going to stop right here and go down. With a move that's this powerful, it can continue for a long time.
Yeah, exactly. It's like standing in front of a freight train and telling the freight train to stop, right?
Yep.
So by the time that freight train stops, your carcass is 3 miles down the road. And so then the next point would be.
There we go. We got your chart. Thank you, Tom. It's TTF1 exclamation point. There you go.
Okay, there we go.
Thanks, Tom.
So I don't know. Where is it now? It's like at 40 or something? It's crazy.
No, that's at 105.
Oh, my God. Right? There you go. Right? So there's just really, until we get this kind of equilibrium between our U.S. domestic market and the European market and the Asian markets, that's just putting more pressure. It's basically just substituting gas that would have been consumed in the U.S. is now being sent in a pipeline and is now being sent to Europe. And so if we're going to continue to increase production for LNG, it's just going to pull more our natural gas, and that's just going to drive prices higher.
Mm-hmm.
And then the third component would be the shipping. And so there are a few shipping companies out there, but the one that I've been watching is LPG, which is a Dorian. It's a limited partnership. And again, this one has kind of been in an uptrend, and it is coming into probably in an area of supply or where it was maybe about a year ago, right around $15. But what I like about this company, and this is in terms of an investor, and we talk about opportunities, this company is paying a 6.5% dividend. This is a $15 stock. It's paying a $2 dividend. That gives you a little bit of cushion on the downside in case the market does reverse. Right. But in the long run, if you think about this dividend, It's not a 13%, not a 6% dividend. I think it's a 13% dividend. Excuse me. If we think about this stock in the long run, if its dividend yield gets in closer to, you know, the companies that are similar to it, let's say 5% or 3.5%, which is kind of a more common yield. This is a $40 stock. So
Yeah.
I've been watching this one as well.
13.48% yield right now on that one. Wow. Nice. And then there's a couple others here that people are mentioning. You talked earlier about BTU as a potential as well.
Well, this is the new right. This is the substitute, right?
Yep.
I mean, until we can get there, and now we're hearing that they're going to block Russian coal.
Right.
So BTU is Peabody Coal, and this stock has been on the rise in the last few weeks. And it definitely had a little bit of a bump in the last couple of days. Now, let's see, maybe I can share. Do you mind if I share something?
Yeah, do what you got to do, brother.
All right. So this one came up on my radar. Am I sharing or not?
Yep, I see, but you got a blank spot in the middle where you're probably there you go.
Okay.
Yep, so I see your bar chart, unusual stock option activity.
So this was from the 6th, which is what, Tuesday or yesterday?
Yesterday.
Time
flies when you're old. I mean, young.
Oh my God, I'm getting so old. So it was about 10,000 options, and this is what's one of the cool things about features of that bar chart has. This is a page that is updated every day. It shows you unusual options based on open interest and volume. But here's BTU. Somebody bought $10,029 put calls and $34 calls, and I think the total price together was about a $4 million bet.
Woo.
Yeah. So that got my notice, and I actually jumped in with on this one. I bought the $29 calls. These are May $29 calls, and if I get a little bit of more price movement tomorrow, I'm going to sell the $34 calls against them at the same price that I bought the 29s for. So I'll basically have a risk-free trade with the potential of making $5 if this stock gets to $34 by May. Which, I mean, if you look at the way a lot of these commodity markets have been running and roiling, this certainly might be one of those trades that could come home. And again, a lot of these opportunities that I've been seeing in recent market. And I know you're a big coal fan, or at least you were.
Coal? I'm not a coal fan. I was interested in coal back during the Trump presidential nominate, or when he was running for president, because you had one side saying, "Hey, screw coal, it's just dirty as hell," and then Trump being very vocal saying, "Hey, I'm pro coal. Let's get coal back and go and get jobs." So that's the only reason I was interested in it. I don't think coal as an asset or as a natural resource is any good. Clean coal is like the ultimate oxymoron.
Yeah, exactly. So I mean, that's definitely one of the ones, another opportunity that I've been looking at. So keep an eye on that. But let's go back to natural gas. You know how I like talking about looking to see what our institutional traders are doing.
Yeah, of course.
In commodities, we talk about commercial traders.
Follow the money.
Follow the money. Follow the money. And what we're seeing is that the open interest is rising in the futures contracts, but it's not in the front of the board. It is happening in 2023, 2024, 2025, which is telling me that this is not a short-lived phenomenon. This is something that's going to stay with us for a longer period of time. Yes, could we have spike waves up and down and a lot of volatility? For sure. But I think this is a mega trend that is going to play out in natural gas. And go back to a natural gas chart, a longer-term chart, and you can see that you just go back.
I got it all the way back to 91.
Yeah, so you can see that prior to when we came into the fracking era, which was, early 2000s, mid 2000s, we were holding, natural gas was holding a range around $68. I think that's what it shows, right?
Mm-hmm.
I think that's the range that's going to become the new normal, the next 2 to 3 years out.
Well, when you look at, I don't know the factors that were driving natural gas back in, let's say, late 2005 and 2008 when we saw those spikes up above 15. What do you remember what the circumstances were that caused natural gas to get above 15? Because that's one question that's going to keep coming up here is, hey, are we going to challenge those all-time highs from 2005?
Again, back then it was just a basic supply and demand. So natural gas used to be a very, very balanced market. There was just enough supply for enough demand. And anytime we got any kind of incremental jump in demand, either from weather or economic activity, that usually sent prices up. Those huge price spikes usually came with huge weather events. If we're look at that chart on a monthly basis. Notice that in the first quarter, if you go like the back for the last 10 years, prices usually bottom around the first quarter, and we didn't get that this year. And prices have been rising since the first quarter, at the end of the first quarter. So that just tells me there's something fundamentally has changed in the natural gas market, right? We normally get the seasonal low as we move from the winter to the spring, and we didn't get that. And now what we're doing is we're challenging not only these higher prices, but we're challenging the highest price that we saw over the winter, right? Mm-hmm. And it's not freezing cold outside, right? It's not winter, it's spring. And this is a time of year when domestic demand is slackening. So that's one of the point I'm trying to make is that the fundamental shift in the natural gas market is coming outside of the U.S., and that is not going away.
One question I have for you is when you look at inventories, right? Of course, every Thursday we get a natural gas inventories number. One of the things going into the winter season, there's always this expectation that, hey, we're going to see the price of natural gas rise because of demand. However, while that might be true if supply was remaining constant, these municipalities are stockpiling natural gas, getting ready for that phenomenon of a cold winter, right?
Well, that's the misnomer. Really, it's not really like your local distributing natural gas company has a big tank in the backyard with natural gas. It's pipelined from storage throughout the country. And what they do is they buy futures markets or they buy space on the pipe to take physical gas. They're very hand to mouth. It's not like they can just put it in a jar and keep it, in their backyard.
Okay.
They can only take as much gas as they need, and they try to anticipate that. That's another reason why natural gas prices in the short run tend to have a greater rally when we have these incremental demands because they are hand to mouth. And again, think about this substitution that's now going is that all this excess gas that we've been producing is not being left here in the U.S., put in storage. It's being sent away. And so now these DC, local distributing companies, when they go to the market and they call up the pipeline and say, hey, I need X amount of gas, and they're like, sorry, bud, we don't got it. Well, they can't be short, right? So they have to get gas. So that has to drive the price up. And so, again, it's just kind of a vicious cycle.
I brought up the natural gas storage chart here, and you can see that it seems very seasonal. You can see literally from, let's call it November through February or March, you get that drawdown below zero in natural gas storage, and we're kind of at that same pattern right now. However, we have not had this Russia issue for the past 6 months. It's kind of just starting and rearing its ugly head. So keep your eye on these inventory numbers because they may start to decline as well. Again, the pipeline can only hold so much, and with demand.
Or in storage, yeah.
Yeah.
So let me give you some guidelines on this one. So the reference is the EIA.gov. And that's where you'll find the weekly storage, not only for natural gas, but for all your petroleum products. So max capacity is about 4 trillion cubic feet, or 4,000 BCFs. And we'll draw down through a typical winter somewhere below 2,000 to the low end of maybe around 1,200. On extreme winters, we will get below 1,000. I think this year we got down around 1,500. So between now and let's say October, we have to start putting gas into storage to get us back to 4,000. That's where the market feels comfortable, somewhere between 3,800 to 4,000 BCFs. Right now, they're projecting that they might not get to 32, which means that our domestic supply is going to be much seasonally lower than the 5-year average. And again, that's why my storage guys, they're telling me they think that they might see double-digit gas once we get into the winter season if storage doesn't get close to that 3,800 or 4,000 BCF.
So the chart I have here, guys, is working gas and underground storage compared to the 5-year maximum minimum. So you kind of have this little ribbon which shows you the average in underground storage for the U.S., and you can see it actually breaks it down into two different components. You've got the 5-year average is kind of that red line. The blue line is the lower 48. So looking at, I'm assuming lower 48 states there.
Yeah, just continental U.S.
Yeah, take out Hawaii because they're such a big oil producer, but but there's this definitely a seasonal pattern here, and it seems like right now we are on this little upswing, but this may not spike up as much simply because of overall demand. There's not going to be as much storage there.
And you have the benefit of looking at the chart. Aren't we at the lower end of the 5-year average?
Yes. Yep. It's just starting to curl up, but yes, we are.
Right. So again, we're starting the season behind the curve, and now storage has to compete with Europe, and Europe isn't going to be starting to pull an extra 3 to 4 to 5 or 6, depending on how you want to equate it, BCFs. Now think about that. That's billion cubic feet a day. Mm-hmm. There's 30 days in a month. So let's make it 5 BCF. So that's 150 BCFs a month over a 7-month period, right? 150 times 7 is 900 BCFs. That's how much gas is not going to be available for storage. So that could put us around 3,000.
Does
that make sense?
Yeah, it's not 900. It's 1,050. Even more.
Right.
Ay. Crazy stuff. So, I mean, obviously you've mentioned several things here. Are you generally looking at just kind of buying these dips on things like EQT, LNG, LPG, et cetera, and BTU, like just buying those pullbacks? Because obviously there's going to be some pullbacks along the way.
Yeah. I mean, like I said, the Cheniere play, I think, might be played out because I just think that they don't have any XX capacity. But there are other companies. I mean, even like if you look at Chesapeake, they're supposedly have some production that's going to come online. But there are other companies. You have to do your homework. I can't think of them right offhand.
Chesapeake,
Tellerin. They have just gotten
what was the ticker symbol?
TELL, Tellerin.
Tellurian.
Yeah, I think it's like a $25 stock or so.
No, it's $5.64 right now. They might have.
Okay, yeah. So they have a facility that they're building that's going to be down in the Gulf, and they're going to try to build an offshore facility so they can capture gas out of the Gulf Coast and not have to worry about gas being pulled across the continent, from what I understand. So that might be a year away for them to have that production come online, but then that would definitely be like a baby Cheniere. Does that make sense? I don't know.
Yeah. No, and it's interesting. I've got the charts up here. When you look at that Cheniere as well, you look at the price. This is one of the most beautiful uptrends you probably will see in any market, even looking at the equity indexes. I mean, go from these lows we saw back in March of 2020 to where we are right now, which is, let me just give you the percentage gain. You're looking at a 440% gain in LNG, which is Cheniere Energy, in that period of time. The only concern I have here is, has it moved too far? Has it moved too much? Granted, I definitely think that you have
Cheniere, yes, for sure.
I think you have more upside potential overall as a broad ecosystem of natural gas, but some of these ones have run their course, and maybe the anticipation of, like you mentioned, later this year, maybe some double-digit gains in natural gas. To what extent do you think some of that stuff's already priced in? Because this chart of Cheniere and others is just incredible.
I definitely think Cheniere is probably, because it's the big boy, right?
Yeah.
And I think it is. But I do believe that there is still a lot of other potential out there in some of the secondary companies or those that have capacity that will come online.
Well, and here's the Chesapeake one. I mean, this was a question earlier, I think, from Naum. I mean, Chesapeake is just insane. You look at their low, which you got to go back to 2021 because I think that I'm not exactly sure.
Well, they restructured. Yeah.
Which is it's
a
way of saying
company,
that they screwed investors is what happened.
Yeah, it was a horrible company. Yeah.
But
that's why I like EQT, because that's a pure well play, right? I mean, they're just taking the gas out, and there are bottlenecks and some issues in terms of takeaway capacity that have constraint on some of these companies, but it's just supply and demand. I mean, if Cheniere is taking gas at $3 and selling it for what you told me was $100, I mean, I'm sure they're not selling it at $100, but something has to, the prices have to come together somewhere at some point, right?
Well, I think it's just a representation of they're absolutely maxed out. This might even mean that they take some of their profits and end up growing their facilities and expanding their production to grow even bigger. But to go from $25 to 140 in less than 2 years is pretty astounding. And I do believe that a lot of this is starting to price itself in, because I think anybody, even if you're not in the financial markets, is looking at this going, oh, well, if Russia's going to get cut off with oil and natural gas, then all of a sudden it's got to come from somewhere. So clearly supply and demand imbalance is going to exist, and we should see higher prices.
Right, exactly.
So that's natural gas. You got any thoughts on crude oil here? Because obviously oil kind of falls in the same boat. It's had some pretty rocky swings here, and actually showing a little bit of weakness over the past couple weeks.
Yeah, I think we talked about this last time. It's just a temporary imbalance around the world. I mean, they're talking about, blockading Russia and all that, but Russian crude oil is still on the open market. It's not going to Europe, but it's going through China. It's going to India. Iran is up for grabs. We don't know if there's going to be some kind of accord there, nuclear accord. If Iran comes back online, that's going to be 3 or 4 million barrels a day. That's going to be on the free market. There's been other places, Libya, in Africa, and some of the countries. And of course, in the U.S., we didn't really have an administration that was really supportive of crude oil and regulatory issues and environmental issues and stuff like that. And also a lot of oil companies here in the U.S. just didn't feel like there was a lot of value in capital growth, or E&P. So I think that pendulum is starting to swing a little bit. So I think there's plenty of crude oil out there. And we are starting to see some demand destruction. For instance, in China, air travel is down. Although here in the East Coast, there's the lowest jet fuel inventories in, I think, in the history I've been watching it. So there still is some incremental demand that needs to be replaced. But overall, there is starting to see some demand destruction. I mean, I know out in California, you guys have got crazy gas prices, but everywhere in the U.S., and people are now, their driving habits are changing. Less people are flying because, I don't know if you try to buy an airline ticket, they're crazy expensive.
Crazy.
I mean, right, 2 years ago, you could fly round trip for $250, and now a round trip ticket costs $1,000.
Yep.
So that demand destruction, I think, is starting to weigh a little bit on crude oil. But I did say to you that I thought there was support for, let's say, WTI in around the mid to 80s, and I think the Brent market maybe around, the low $90. And we have broken some trend lines, and we have broken some moving averages. So I think the market needs to rebalance at a little bit lower, but I still think in an inflationary market, you got to buy dips in crude oil.
Yeah, I agree. I think that I think most of these energies and commodities buy the dips. I mean, we're pushing ourselves harder than we ever have, and I think these prices are going to continue to rise. Margaret says, "Were we energy independent under Trump?" Let's not make it political, but I mean, I think you might be able to make the argument that we're still energy independent. I mean, we don't need to be buying crude oil from Middle East. We don't need to be buying natural gas from the Middle East. So No,
I think we use something like, I don't think we were really officially energy. And I think we use about, again, I got to put it on the thinking cabinet. I think we use about 18 to 20 million barrels a day in the United States. And I think at peak production, we were like 17 million. So we weren't really truly energy independent, but we were getting, crude oil from places like, Canada, so, North America independent. And we were exporting crude oil. Now, domestic production has dropped significantly. I think we only produce maybe about 12 million barrels a day now. So now, yeah, we have to import a lot more. And because of those constraints that have come through, the Keystone and other pipelines, we have to go and look for it someplace else. And I think that imbalance is about 3.5 to 4 million barrels a day. Don't hold me to it, but so we went from basically a neutral production to demand here in the U.S. to now being reliant on other sources of around 3.5 to 4 million barrels a day.
Tell me a little bit about what you got cooking on over at Bar Chart. I know you always have some workshop going on. I'll click on over there right now. You always have some lesson going. So here's barchart.com. To find out, let's see, you go to tools, and there's upcoming webinars over here.
Right.
And the next one is going to be protecting profits with options. Dun, 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 dun. Look at that handsome lad over. Who is that guy over there with a suit and tie?
It's amazing what they can do with filters, right?
Photoshop, yeah.
Yeah. So, yeah, this one is going to be basically we're going to talk about how to do some portfolio management. Well, when you start looking at returns of your portfolios over a long period of time, what you're going to discover is that about 10% of your portfolio is going to make up about 90% of your gains. And so it's really important that when one of those stocks or whatever component of your portfolio is capturing a large, significant amount of gains, that we'll use options to learn how to protect those gains. Now, what we're going to talk about is what is called a no-cost collar, and it basically is selling calls and buying puts at the same time. Selling calls are paid to buy for puts. And we'll look at supply and demand and wait for up days in the market. For instance, like this day would be a great day to sell calls in Cheniere, or any of the energy stocks, and then capture that large premium, and then buy some puts that are below the market. And what you hope for is that the market continues to move in your favor, but it doesn't go through your calls, and your calls get exercised. And if they both exercise worthless, you still come out ahead of the game because you still own the stock, and the stock is still going higher. So that's that theory. But the one that I really want to promote, and it's not on the website yet, and will be up in the next couple of days, is on Wednesday, 4/20.
Convenient.
I'm going to do a session on our stock ideals page. If you want to look under the stock tab, market ideas, cannabis stocks. And so there's a lot of interesting things that are going on in the cannabis world right now. We had the Moores Act was passed in the House.
Wait, where is this one at? Hold on, I hit stocks.
Stock under the stock tab, and it'll say something all the way to the right. It'll say stock market ideas. Do you see that?
I see stock market sector, world review,
Below sector, stock market ideas.
Oh, yeah, got it. Okay, there we go.
Cannabis stocks.
Yep.
So I'm going to kind of break down the cannabis market, talk about MSOs, multiple state operators. We'll talk about growers. We'll talk about branding. We're going to talk about technology and consumer applications, and then we're kind of figure out where we want to be looking for the next opportunities. Do we want to be touching the plant, or do we want to be at the end user, or do we want to be in the technologies that are going to support these companies? And then we'll look at the organic growth, no pun intended. For instance, New Jersey is going to come online for recreational in a few months. Well, that's what we're hearing. And analysts are predicting that New Jersey alone will be a $2 billion market.
Wow. Well, the good news for everybody, that webinar is slated to be, I believe, a 1-hour webinar, but because John will be taking bong rips before that show, he wants to make sure he's well-versed in the materials he's talking about, it's going to be a 6-hour presentation as he talks really slow.
No, it's not.
You're almost blushing over there, buddy.
It's funny. My boss was saying the same thing. He goes, I think you should get high for that. I'm like, no, come on.
Oh, hell. Hey, John, thanks for coming on. I appreciate you talking about natural gas. It's, this is stuff that I always pay attention to natural gas, but I'm just about the price chart, not all these other variables. So I appreciate you opening up my eyes and mind to what's going on out there with natural gas, with crude oil. I hope the viewers out there enjoyed that as well. If you guys get a chance, check him out at barchart.com. If you go to tools, he does their webinars and a ton of educational content out there for you. And One plug, yes, do it.
Ready. I just started a business Instagram account. It's Good of All Trading. I'm just going to start throwing up just charts and some ideas or something unusual that I see. It's really going to be a lot more technical analysis than anything else. It's going to just be for fun, but it's Good of All Trading.
I'm just going to bring it up right now. There you go. Good of All Trading. I will. I don't even use Instagram, but I will follow you just for fun. Just because
I follow you.
I never post anything on Instagram. I don't know. I have a disliking for social media, as most people know, just simply because I feel like it makes us antisocial. But I'm sure you'll be putting out some good stuff. So
yeah.
All right, John. Hey, thank you so much. May the remainder of your week be awesome. I'm going to see if I can get you on next month. I do like the monthly update on commodities.
Well, let's plan do something maybe at the end of May near Memorial Day and see how close we have come to that $8.
Perfect. I think we'll be there. All right, John. Thanks so much, my friend. Have a great evening. I'll talk to you later.
All right. Cheers. Bye.
All right, bye. Guys, that was John Rowland giving us some insights into natural gas. You also have crude oil as well. We could talk about many other aspects of the markets, but for somebody who was a former NYMEX floor trader, New York Mercantile Exchange floor trader, I think he brings a lot of content to the table, a lot of value in that discussion, especially for those of us, or for those of you who are trading natural gas, some pieces you may not be thinking about. And I think the more information you have, the more armed you are for whatever battle it is you decide to take in the financial market. So, John, hats off to you. Thank you so much. Again, if you have questions for him, you can, if you can follow him on Instagram, his Instagram is Good of All Trading on Instagram. Just because I will help him out here, I will post this right here. And I'll post it in the chat. So there's his Instagram if you guys want to follow him. I guess I should do gratuitous plugs for my Instagram as well, but I never post anything. So there you go. All right, let me see if I can get this piece done here. I didn't open up my my visuals earlier, but I'm hoping I can get that done today. Damn it. I didn't even update my slides and everything, so I'm going to have to do a real quick move here so I can bring up your calendar because I want to show you this for tomorrow. One thing that was noteworthy for today was the initial jobless claims. It's the lowest in 40 years. The initial initial claims numbers dropped to 166,000. That's the lowest in 40 years for the United States. It's incredible. Normally, I've seen it get down to like 180, 190 back in 2005 and 6, but to see it at 166,000 is pretty impressive. Now, here is what is happening for tomorrow. Here is your calendar. For Japanese yen, you've got consumer confidence, economy watcher sentiment. You have Italian retail sales for the euro. Canada has employment rate. I always get those backwards. Unemployment rate and employment change, and the U.S. with final wholesale inventories. There you go. All right. I think that's going to do it. I have to get running here, so I'm going to have to end the show just a little bit early today. Let me go back to the main screen. Again, if you have questions for John, he has just 4 posts. And he just started it. I think he'll do more and more of them. I think he'll do more, but he's, as you guys have seen, John has a great sense of humor. He's funny, so I have a feeling there'll be some very interesting things being posted there by John. So I guess I will follow back right now. There we go. Followed him. Done. Okay. Tomorrow is Friday, so I think it was Gallo. I think Gallo, you emailed me where I was asking about a mentor. So I think what I'm going to do tomorrow is talk a little bit about that because I think many of you are looking for mentor in the financial markets. And unfortunately, what I think happens is you end up buying all of these classes with people that you think are quote unquote perceived mentors. And it doesn't have to necessarily be buying classes, but books or subscribing to things because you're looking for that golden edge. And I'll talk about that tomorrow because I think it's a lot easier than most people make it. I don't think it needs to be as challenging. And I'll talk about my experience and kind of what I did with my mentor and how that relationship grew and where the gives and takes are in that. So that will be kind of our topic, or it's part of the topic for tomorrow. And Michael, you heard it. He's talking about cannabis. I want to make sure you check out that webinar. So now that you just totally threw me under the boat, Michael, and what's your most significant hammer today? Fine, I got to go. I have an eye doctor appointment, but I'll run through them real quick. So we didn't look at the overall indexes. I'm going to start at the bottom and just on the daily, right? Here is Bitcoin down about 1% today. Not really a great hammer, although it is a hammer, but not textbook, right? You look at the Russell. The way the Russell finished today, you have these long topping and bottoming tails, and we closed definitely in the upper half, but that's not really a strong hammer in the Russell. NASDAQ. Same picture, right? You have this kind of, it's almost like some people call it a long-legged doji or maybe a spinning top, but it's not necessarily a hammer, even though you have this small real body today on the NASDAQ, which was up just ever so slightly. That's not really a hammer. Dow, that's not even a hammer, right? You got this big green candle, but there's a topping tail above it, a long bottoming tail, so not the best. S&P. That is really a indecisive spinning top formation right there. Gold. Gold doesn't matter. And then you have crude oil, which at this point is just a big spinning top. So out of the indexes, I don't see anything that's awesome. Now that said, I did sell some puts today. I actually sold some on XLY. This XLY? Yeah, I did XLY. I have the 160s, so I'm down below this area of demand here. Collected about 1.6% premium for the May contracts, but that's not even a great hammer. Now, it looks strong, right, because it's closing near the upper half of the range, but still. Then you have healthcare. Healthcare just went nuts today, no hammer there. Energy. Energy is probably the best example of a hammer today from just the candle, right? Just the candle. However, this candle doesn't mean that much because notice the price action. Price action for the last 10, 12 days has been totally sideways. So I want to see this candle at the bottom of a downtrend, which I don't see it in this one. Let's keep going on the list. I'm just going to go through the major ETFs and see if there are any that jump off the screen at me. Nothing in industrials, nothing in technology. There you go. So here's the one. I did sell some puts on financials as well. Right now I have the 35s. I sold the 35s for May. That again is also collecting about 1.5%. So I'm taking a little bit more risk than I want there by going to 35s, but I'll take the 1% per month. With regards to financials, notice the pattern today. You have this long bottoming tail. It's really what some people call a dragonfly doji. Now, a dragonfly doji, statistically, this crossbar where it open and close should be right at the top, but it's not. So, we can call it whatever you want. But bottom line is, this is probably the one I like the best. How are you going to make that trade, or what are you going to look for? You're looking for a break above the high of today, which, let me get the magnet on here. We'll make sure that snaps. Should be snapped right about there. So right around 37.69 is the high of today's candle for XLF. Now financials, if it opens up tomorrow somewhere down below 37.69 and starts to break above that, then there's the buying opportunity. So that part, that was probably the more attractive one from the S&P sectors and the indexes. That said, keep in mind next week, guys, is going to be a monster week for financials. You've got a lot of major banks reporting next week to kick off earnings season. So let's be careful there because you don't know which way this thing's going to go. But right now it does look like it's due for a bounce because look how aggressive the sell-off has been in financials. And also you have this hammer formation or dragonfly doji, or the one bad thing I don't like, volume. Volume should have been higher today, but it wasn't. So that's a little bit of a negative there. You have utilities, which as a hanging man formation, I tried to sell some puts, buy some puts on XLU yesterday, but I didn't get executed, and I didn't get executed on that today. So no puts on XLU for me. And then IYR, is the last one, which really just sideways action. So the only one I really liked, as you guys saw there, was on financials, at least the real strong hammer formation. And of course, we could look through a lot of other markets to see different opportunities, but I got to run. So there you go. I ran through the top indexes, ran through overall markets, and hopefully some of that will be a play. Bullish enough for me on XLF? I agree, Margaret. But again, it's a question of, are you going to be aggressive and say, I'm just going to buy it because it looks bullish, or wait for it to confirm? And that's the risks we have to weigh as traders is, I can be aggressive and buy it right now, but it may just fail. Or I can wait for confirmation, leave some money on the table, right? Leave a little bit on the table for it to confirm, but now I have the benefit of knowing that it's breaking through yesterday's highs and therefore potentially moving on to even higher highs. So there you go. All right. Thank you very much, Michael, for bringing that one up. Yeah. And again, there were a lot of these types of spinning top formations. They actually looked like great hammers earlier, and then right near the end of the session gave back some of those gains and sold off from those highs a little bit. So there you go. Excellent, everybody. I hope you enjoyed today's show with John Rowland. You can find him at barchart.com or his Instagram account, which is a new one, which is Good of All Trading on Instagram. I'll keep following him and see if I can get some good humorous pieces from John as well. That said, tomorrow is going to be a whiskey day for sure. I am definitely looking forward to a nice, cold, frosty glass of whiskey on the rocks. I hope you guys join me for tomorrow's show. Bring some comments, questions, feedback. If there's things you want me to talk about on tomorrow's show specifically, put them on the YouTube video or down below the YouTube video. I didn't get a chance to look at it today, but I will get it the last 2 days caught up. All those questions will be brought on tomorrow's show, or email me at TraderMerlin@gmail.com. That said, happy trading, everybody. I'll see you guys tomorrow.